Your world at 10. Now, you'd think after everything that's happened in the last 2 years, they'd be cracking down on credit derivatives or over-leveraged banks. Instead, world leaders Barack Obama, Gordon Brown, Nicolas Sarkozy, Angela Merkel, they're all cracking down on tax havens. Here's one Brown comment from last week's G20 summit.
We have agreed that there will be an end to tax havens that do not transfer information on request. The banking secrecy of the past must come to an end. The Organisation of Economic Cooperation and Development are this afternoon publishing a list of tax havens that are non-compliant and where action must immediately be taken. And we have agreed tough standards and sanctions for use against those who don't come into line in the future.
So does this crackdown mark the end of tax havens as we know them? Are countries just insisting on information, or are they opposed to lower tax regimes? To answer those questions, I have with me Dinesh Kanabar of PwC. Mr. Kanabar, thank you very much for joining me. I understand that these countries are chasing information. They want more disclosures. Is this crackdown likely to threaten legitimate corporate structures such as, let's say, M&A SPVs that are routed through tax havens more for efficiency and less for secrecy?
Traditionally, Menka, if you see, tax havens have been used for a variety of purposes. And over the last few years, particularly there are a couple of types of tax havens which have been attacked by governments all across the world. You would have read very recently about Switzerland really amending its banking laws to provide for more information. Traditionally, if you look at how tax havens have been used, they have been used for succession planning for a variety of very legitimate issues. They've been used for housing captive insurance companies and the like, again, a very, very legitimate purpose, and that would continue going forward also. There are, however, two primary purposes of tax havens which are coming under increasing scrutiny. First is stashing away ill-gotten wealth of countries. So, for example, in the recent past, you are aware of how various politicians in our own country on elections have said that they would want to get all the ill-gotten wealth which is stashed away overseas. And the only way they can do it is if they have information as to what is available overseas. So that's one aspect which is worrying all countries all over the world. And second, obviously, is this issue regarding drug money, terrorism, etc., which is coming under increasing scrutiny. And the key point which seems to emerge, Menka, is that unless you have information, how are you ever going to track down what is legitimate and what is not? That's one aspect. And second is, as you know, OECD has come out with this report on harmful tax competition. And the belief is that countries should compete on the basis of what they are able to provide to the investors, not merely on the basis of low rates of tax. So both of these are going to come under increasingly scanner of the regulatory authorities all over the world.
You know, Mr. Kanabar, there's no complaint against the fact that, you know, countries across the world are entitled to more information, especially if they're losing out on tax, or like you mentioned, ill-gotten gains being secretly stashed away, or terrorist money or drug money. That's all fine. Is this going to threaten legitimate corporate structures that are simply routed through tax havens for efficiency or for the kind of lower rates that these tax havens offer? Do you see or envisage pressure on these tax havens to give up that advantage of lower tax rates?
Indeed, I do. So, for example, there has been increasing pressure on the tax treaties which India has negotiated either with Mauritius or with Cyprus. And the question is, do these countries really provide any legitimate substance? And ultimately, it's all going to boil down to substance. If there is substance, then merely because there is a rate of tax which is lower is not going to be impacting. But if you are going to provide a conduit which has no substance at all, then increasingly that's going to come under scrutiny. And once you put in regulations, Menka, it's not possible for you to distinguish between who's using it legitimately and illegitimately. So will tax havens come to an end? Absolutely not. I think, as I said, there are various purposes for which it will continue. As succession planning is a very, very key issue, for example. And that's going to continue. But increasingly, two things are going to happen. If you are using tax havens without having any substance in them, that's going to come under scrutiny. And second, if you are trying to keep information away and not provide it to the regulators, that's not something which is going to be accepted by the regulatory authorities anywhere in the world.
So what do you suggest companies in India that have used tax havens legitimately, do now here onwards? Are you saying that this is a deterrent when it comes to using tax havens? Are you saying that even those countries like Mauritius, where we have double tax avoidance treaties, we need to be careful about routing investment vehicles through them? I mean, what is it that corporate India should keep in mind, on the back of this crackdown?
When you say what should corporate India keep in mind, Menka, actually what you're meaning is really, if you look at, for example, Mauritius, which was a case in point, It's really inbound investments into India for which Mauritius has been used, not really as much for outbound investments, although there are some advantages of using Mauritius for outbound investments too. The question which will come in is that if you are a company which is housed in Mauritius and making investments into India, then do you have substance which would justify your routing investments through Mauritius, or is it only a conduit? And again, there are a variety of ways in which one can demonstrate substance. So is it merely a shell company, or is there something more to it than that? And many evolved companies have really tried to put substance into Mauritius. They've tried to have offices there, they've engaged people there, they ensure legitimacy of board meetings and things like that. So unless there is substance, you're going to have a problem. That's the first message which corporate India needs to have. But coming to the point which you raised earlier on regarding M&A, one can say that for M&A, using SPVs is going to something which is going to happen all the time. We will always have situations where you have holding companies in a tax-neutral jurisdiction, which will have operating companies all across, and where there will be transfer of shares of an offshore company, which is a holding company, leading to a transfer of the operating companies down below. That's something which cannot change.
All right, Mr. Kanabar, thank you very much for joining us. You've pointed out world over the argument seems to keep coming back to substance over form. Well, it's time for us to take a quick break on Your World at 10.